Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Polestar Automotive, ticker symbol PSNY. And so over the course of the past week, the short week, 4 days, Polestar had a pretty brutal week going down over the course of the week. Just under 26% down, closing on Friday, February 23rd at a price of $1.31, hitting a new all-time low of $1.30 over the course of the week. So, not looking too good, but I do think that it has arrived at a couple key levels. I do think we might see a fake out in store. And there is one thing that happened on Tuesday that was kind of a tell for this downfall. So I think it's going to be important to look at that and understand why the price came down so much. And so in order to do that, I am just going to switch over to the daily time frame, throw up some drawings. But just before I do that, I did want to point out that on Thursday, February 29th, Polestar is reporting earnings in the pre-market. I wish I could stream it, but unfortunately I have a dental appointment, so I can't. But, I'll include a link to their investor relations so you can check that out if you would like. But before I do throw up the drawings, I also wanted to point out falling three methods that we can see right here. And that is a bearish indicator, a bearish pattern. So basically what you have is this big red candle here on February 13th, followed by three green candles kind of stair-stepping their way up. And then on the 20th, February 20th, we did see a big red candle going down about 5.65% on that day, on Tuesday, the start of last week, the short week. And that created this falling three methods, which is, this big drawdown, three steps up, another big drawdown. And that indicates a continuation to the downside. And I did post not only on Twitter, but also on the community tab of the channel. I did post this graphic coming from Investopedia. I'll include a link to it in the description of this video, just going over falling three methods, and that we did see that on Tuesday, following the trading day of Tuesday with Polestar. And so any bullish thoughts that I had on the stock breaking out of the wedge, that was all negated with this big drop. And so if we would have recognized that and taken a step onto the sidelines before this drawdown, that could have potentially saved some money. So just throwing up the drawings here, I just wanted to take a quick measurement from, the bottom of the falling three methods, so the bottom of Tuesday, so we could get an idea of how much we could have saved. And so that could have prevented a more than 21.5% loss. And so having noticed that and then taken action, that could have been a good move. But I do think, as you might notice, that we might have arrived at support right around $1.31, basically a perfect landing at this 2618 extension from this pretty short Fibonacci retracement. But I do think that could serve as kind of two factors, really. One being, that we have come to that level. Two, did hit a low of $1.30, just being kind of a round number as far as the change goes. And then three, that while it does look like we've broken below this downtrending level of support, the base of this wedge, also in this channel, I'll take a step back and we can look at that in a second. But, we haven't gotten confirmation yet. And so confirmation would be if on Monday, February 26th, we did get a close lower than Friday's low, which would be $1.30. So do look for that. I do think there's a lot of potential that we do see a bounce and that we do reclaim the bottom of this wedge, or the getting back above this level of support. And I think that's important that we start trading above this level of support before earnings. But I should also note that could coincide with really just some sideways price action before then. If we do see a little bit of an up move, we would be back into that wedge. So I think that could suggest that price would be going up following earnings. So that is what I am hoping. And so where are some levels that price might be going to? Really just based on this Fibonacci retracement that is based on the low of February 5th going up to the high of February 12th. So just a very, mini move there. So the 1618 from that retracement is at a price of $1.52. And so really just like right around the range of $1.50. I do think it would be good if price could get back up to there. And, it might be bumping into some resistance around there with this downtrending level that is now resistance. Just above that 1618 is another 1618. Going back in time, I had done that in a previous video. That is at a price of $1.56.6, but just above that is $1.59, which was the low before this big run up. So I do think that the range of $1.50 to $1.60 is going to be kind of tough to break above, especially when we get towards the low that was over here. It was $1.65, and just a penny above that was the lowest close in this consolidation. So, I do think that is something to be considering, that once we get to $1.50 to $1.65, we could be bumping into some resistance. But then, if we can break through this consolidation, which does look like it was a bear flag as it turns out, if we can get above that, that would be getting to $1.86, marked by this line here, the high on February 12th, and then getting up to the psychological level of $2, and then getting into this gap to fill it at a price of right around $2.15. But now, if I do take a step back, we can look at some of the bigger picture stuff that's been happening. One, as I had mentioned, we have been trading in this downtrending channel. It does look like we're testing not only the bottom of that, the bottom of this wedge, and, this 2618 extension. So I do think that we could be at support as long as we are able to get back into that channel or close on Monday above $1.30. I do think that's quite possible. Ideally we close right around $1.35, which is approximately what the price closed at in the after hours at a price of $1.36. So if we close Monday around that level, I do think that could mean there's a lot of upside. But, if there's not a lot of upside, I do have this 1618 extension from this Fibonacci retracement here, and that is at a price of $1.13.3. So, of course, good to prepare for further downside that is possible, but I do think that Monday's close will be key. And then one final thing that you might notice is I do have this trend line just under the lows and the RSI. And so here on January 12th, when we were putting in lows over here, the RSI hit a low of 26.84, whereas now it is currently 28.08. And so we are putting in higher lows in the RSI, whereas we're putting lower lows in with the stock price. And so that is bullish divergence. However, what we would want to see is an uptick in the RSI to show us that this is indeed a low and that it's not just going to continue down. And I suspect that on Monday, we will see a green day. We will get back into the wedge and it will continue higher to test the top of it right around $1.52. Hopefully we get a breakout to $1.66 and beyond, like to $2, potentially pulling back to retrace and test this uptrending level as support again. And so I do think that this bullish divergence will play out, and I think it will be demonstrated on Monday, but I could be wrong. We could, of course, be going lower, like to $1.13 before or after earnings, so do be careful with this one. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.